The global Forex market moves fast. Trillions of dollars shift hands daily, creating a high-stakes environment that draws traders to capture gains from currency fluctuations. But that excitement attracts predators. Eager new traders frequently find themselves targeted by offshore, unregulated brokers, promising massive, effortless returns. These platforms rely on specific traps: extreme 500-to-1 leverage and 100% deposit bonuses. The catch is in the fine print. Those bonuses often include impossible trading volume requirements that effectively lock your money on their platform. This chart shows how a 500-to-1 leverage ratio actually functions. With leverage this high, a microscopic downward movement on a currency pair triggers a margin call, instantly wiping out your entire account balance. If that unregulated brokerage suddenly vanishes overnight, taking your locked funds with it, you have zero legal recourse to get your money back. Long-term survival in the markets requires operating within the strict protections established by European and French law. The foundation of that protection starts with the European Securities and Markets Authority, or ESMA. To prevent retail traders from experiencing catastrophic account wipeouts, ESMA implemented strict, non-negotiable caps on leverage across the entire continent. This chart shows the step-down tiered leverage limits ESMA requires. You get a maximum of 30-to-1 for major currency pairs, while non-major pairs and gold are capped at 20-to-1. Higher risk assets like cryptocurrencies are limited to just 2-to-1. These limits act as a vital shock absorber. Instead of snapping under pressure, a 30-to-1 limit preserves a healthy margin buffer, allowing you to survive sudden, violent market swings without an instant liquidation. ESMA also enacted a total ban on the distribution of high-risk binary options and permanently prohibited the deceptive retail trading bonuses used to trap client funds. These structural guardrails are designed to keep you in the game, providing the longevity needed to actually execute a long-term strategy. While ESMA sets the blueprint, the frontline enforcement in France falls to the Autorité des Marchés Financiers, the AMF. The AMF strictly mandates that brokers hold segregated funds. This diagram shows exactly what that means. The broker's own operational capital is kept completely separate from your protected client vault. They cannot legally mix your money with theirs. You are also guaranteed negative balance protection. If a market flash crash pushes your position downward, the broker is legally required to bring your account back to zero. You will never owe the brokerage debt. The AMF effectively builds an impenetrable firewall. Even in the worst-case scenario, where a brokerage faces total institutional collapse, your individual capital remains untouched. The EU framework also includes the MiFID II directive, which introduces a cross-border feature for retail traders called passporting. Because ESMA enforces a high universal standard across all member states, a broker properly authorized by a strict regulator in any EU country can legally offer services in France. This provides you with a wide field of competitive brokers from across the continent, making it possible to choose partners based on superior trading technology or tighter spreads. MiFID II unifies a historically fragmented continent into a single integrated marketplace, where high safety standards are universal for every consumer. To benefit from this system, you have to do the initial work. You must verify a broker's EU authorization before depositing a single euro. Take a few minutes to manually check the official AMF Regafi register or a verified EU database. Look for the license number and confirm the authorized status. Prioritizing compliance eliminates the institutional risks that often destroy retail capital before a strategy even has time to play out. You are trading with a built-in safety net. This is exactly how FXNX operates. We function flawlessly within this strict EU regulatory architecture as your fully compliant partner. Because FXNX strictly adheres to ESMA and AMF guidelines, including segregated accounts and negative balance protection, you can focus your energy entirely on mastering your charts. Trade securely, leverage the European system to your advantage,